As markets continue to respond to the latest tit-for-tat trade war between the U.S. and China, our next guest says a compromise can be reached over the coming months. For more on what it means to investors, let's bring in Pierre Ouimet. He's the head investment strategist at UBS Canada. Thanks for joining us today.
Pleasure to be here. Thank you.
What's your outlook for these two very powerful trading partners now in a standoff? China has signaled it's open to discussion, but we haven't seen much more than that.
Well, it looks like, the battle of the heavyweights, and the rest of the world is going to kind of be subject to the impacts of all of that. But it clearly seems like the U.S. wants to isolate China and negotiate a whole bunch of trade deals right, left, and center, and potentially get the rest of the world on side with what they're trying to do in terms of possibly putting China in a difficult position because of countless errors in the past, and the fact that China has kind of cheated on its commitments within WTO, intellectual theft, and not necessarily playing by the same rules that everyone else is playing by. So I think that's not about to abate, I guess, from that perspective. So, but the rest of the world looks like the U.S. administration is a lot more accommodating, and it could provide us with some relief here over the short term, or at least the moratorium that was announced on April 17th. It looks like it's taken away the worst case scenario, which was a recession in the U.S. and 22 to 25% effective tariffs and stagflation, and so that seems to be, for the time being, at least, been relinquished to the back burner. And we're kind of in a situation here now where possibly in a no man's land, but with potential for some reconciliation. But I don't think anything with China is going to improve overnight.
I don't think either. I think what you mentioned, which are some of the conflicts between them, like the stealing of intellectual property and trade disputes that don't really get followed through when there is some sort of result from the World Trade Organization. I'm just wondering, because those issues are so big and so entrenched at this point, where do you think the U.S. most wants to see a concession?
Well, they like to see concessions on tariffs, obviously, and access to the market, which has been somewhat limited. I mean, the U.S., you look on a volume basis or dollar basis, they import 5 times as much as they export to China. So, I mean, the trade deficit, you have to find a solution in order to resolve that, which means that probably in the end, it's going to be very difficult for China to really come out with a major victory on the tariff side, because I mean they have more to lose than the U.S. has. That's clearly. It's an export nation, and which is not the case of the U.S. 10% of their GDP is trade, and I guess about 20 or 25% of that was China. So it's a lot less of an impact on the U.S. than it is on China.
So, Pierre, what would the U.S. want to see exported to China? What do they have that China could open the market up for in exports from the U.S.?
Well, I guess energy would be one, agricultural products, maybe certain specialized industrial products as well. It's not clear exactly what they'll be able to export to China, but clearly they want a greater access to the market and possibly as well, more protection for U.S. companies operating within that market and a level playing field as well in terms of the competitive environment. So it's a whole host of things. I think that it's been 30 years in the making, and it's probably not going to be resolved overnight. That's for sure.
Let's talk about what's happening here in Canada. The Bank of Canada held the rate, also laid out 2 scenarios. Given the uncertainty of what's going on with the trade war, said, we don't know which way it's going to go, so we're going to give you a scenario for each way that it could go or they think it could go. What did you make of that approach?
I think everyone's thinking in a bipolar world right now. It's either or, and the Bank of Canada is not really different from anyone else because they really don't know what's going to happen. So we're all waiting for the next shoe to fall, and same with the Bank of Canada, which is why they kept rates where they were, which is, I think it's not necessarily justifiable. I think they should have cut rates. I mean, the Canadian economy is definitely going to suffer, that's for sure. And it was going to suffer anyway. It was going to go through a very difficult 2025. And then we have political change in the wind as well, which is compound things in terms of uncertainty. And so Canada is kind of in a funny place right now. So I understand the Bank of Canada being hesitant, but I think the Bank of Canada should be more accommodating because, the Canadian consumer is obviously in dire straits. And, the problem with Canada is it's been a problem that's been a long time in the making. Canada is just not competitive. So and that has to do with our industrial policies, with our monetary policies. It has to do with our political orientations, and our productivity has been lackluster. If Canada wants to compete, we got to get serious about it. And we haven't really done anything of significance in that measure. So for Canada, for an economy of the size of Canada, operating next door to the U.S., we have to be incrementally better on all aspects, and that includes productivity, it includes corporate taxes, openness towards investment. We just have to be a little bit better than the U.S., and we're not right now. So it's something really has to give in Canada in terms of our overall economic orientation. That has to come from the top down, obviously. So it's going to take a while for that also to be operative. And I think there's some talk that there could be some progress in that direction, but I think we definitely have to press on the accelerator quite pretty fast here in terms of getting movement in that direction. I think diversifying our exports is a good thing. Cross-border provincial trade as well is a good thing. But encouraging investment. There's been a lack of investment in Canada for the last 10 years or so, and that has to change as well. We should be a relatively attractive place to invest, but we've made kind of the environment is not really favorable to that.
All right. Pierre, I do have to leave the conversation with you there, but thank you very much for sharing some of your time today. Pierre Ouimet is the head investment strategist at UBS Canada.